Hello, hello. Welcome in, Timothy. Can you hear me okay? We get this all tested out. So I can see my screen being shared. It looks like we've got a good view of trading view at the moment. It looks like my audio is being picked up, but definitely want to let me know if you can hear my voice right now. I wonder what the delay is too. It might be substantially delayed versus real time. By the way, Timothy, if you can hear me okay, I wanted to let you know I did end up taking a trade right as you ended up leaving today. Perfect. Ended up taking a trade. I've got it marked on the chart here. I took a 2-to-1 hitchhiker style trade on the Nasdaq just as you were taken off this morning out of Discord. So I wanted to share with you. This was essentially the only trade I took today. I was a little distracted being in the chat and hanging out with you and whatnot. But I snagged a 2-to-1 on the Nasdaq in the direction of the trend. I also wanted to kind of show you like that. Yeah, right. But I wanted to show you the perspective of just a different perspective than what you were seeing. You were looking at a pull into VWAP as an opportunity to go short, but your indicator was so late to the party that it kind of gets you in at the wrong time. It was like a trap. And so I wanted to share with you, when you see, and this is why you need VWAP on your screen, when you see things like this, where you've got a deep pull into VWAP, that's you got to be very careful taking those trades, because unless you're getting in really early and you have like a very good risk to reward where your stops like say up here and you've entered in really quickly, you're targeting just until that trend is over, like we talked about, like the trade kind of ended right there on that buying. You have to be really careful because larger institutional traders, they like to trade those pull-ins to VWAP. That's really where a lot of the buying will resume. Especially when we had buyers firmly in control of VWAP in the morning session. This little pull-in, they're often short-lived, and really you just have to be really quick about catching that scalp if you're going short, and be really careful that you want to do that on a reduced size, and you want to make sure that that VWAP is typically that point of control. And it's so important that you're getting out before the party's over. So if you did end up going short into here, you needed to take profits really quickly. And unfortunately, indicators can be lagging, so it can get you in a little too late. And you don't want to fight the larger trend. Looking at the 30-minute here, ever since this swing at the bottom of the after hours, you can tell that buyers have been in control. There were points where sellers took over for a moment, but like just in summary, you can clearly see we're making higher highs and higher lows on the 30-minute. And so you don't want to fight that trend. You want to learn to swim with the current and make sure you're never fighting it. So if I'm ever going short against the trend, it needs to be after a major extension. So honestly, for you and your trading style, I was going to recommend looking at the major levels for previous day to help you identify when those reversals might be best for you. So for example, if I go to gold's going to be a clear example. Gold trades back to VWAP so often, and I think it's because it holds its value. But basically, if you're taking a one-to-one reversal, you should consider taking it on something like gold and making that your go-to chart, because yesterday actually gave a really good example of this. But if you're trading a reversal on gold, you could trade inside this back to VWAP type of move where we had a clear low being put in. And then ever since that low in the morning session, you can tell we were trending higher back to VWAP. So the true trade would have been like from this break back to the VWAP. But you can scalp in here and take one-to-ones in the direction of that really easily. You're essentially just trading these pullbacks into the EMA, and you can take a one-to-one in the direction of the trend. And I think for you, that could be so helpful to get you trading in the right direction, trading with everyone else so you're always on the right side of the trade. I think it could drastically improve your win rate by a lot, to be honest. I think it would also give you a more clear path of when to size up and when not to. Like imagine when you're trading with the trend, you're going on, let's say, double the amount of sizing, versus when you're trading counter to the trend, you want reduced risk, you can be something like half the size because you're taking on more risk fighting the bigger trend. So definitely want to keep an eye on who's in control of the market right now and being on the right side of the trade. I think honestly a really simple way to do that for most traders is just to have VWAP on the screen. I keep VWAP in purple, it's just my color preference, but that tells me for sure, that tells me that when price is above VWAP, buyers are firmly in control. I know without having to think about it, if we have price above and holding VWAP, we should be looking bullish. We should be taking a long. Now, the only exception is everything works as a rubber band in trading. So just because we're, above VWAP doesn't mean the move is always long. Eventually, the move will run out of steam and start trading back to VWAP, kind of like I showed you in gold. Right now, though, this morning we had that strong drive higher on the NASDAQ. We had that deep pullback into VWAP, which happens almost daily. Deep pullback into VWAP, which a lot of traders are watching for because they like to catch those dips as a buying opportunity. But if you didn't catch the trend up, like this whole leg up today, you essentially can wait for the counter trend to be in. And you're starting to see that already. We've got a volume spike right at the top, right at yesterday's high. You got this volume spike, and it's telling me by the price action and the volume that things are starting to break down. So instead of looking for longs, at this point, this is the first time in the entire day, besides this really short-lived, pullback, that shorts started to be like something I'd be interested in on the NASDAQ. If we're holding cleanly above a rising VWAP, we are longs only, unless it's clearly breaking down on volume back towards it. So right now we're starting to see consolidation below my 22 EMA, which is a 9 EMA on a 5-minute chart, by the way. And seeing that tells me sellers are starting to gain control over the NASDAQ right now. We couldn't hold above yesterday's high, which is that blue line for me. And the 30-minute gives you such a clear picture of that, where you've got a clear test of that 30-minute level. And since it's not holding above it, and we're starting to see that breakdown, only now am I slightly interested in it going short. It's the only part of the day when the steam is running out that I start to look at it and I'm okay with taking what we call the backside, the other side of the trade. So be mindful. Are we extending away from VWAP, or are we trading back towards it? And that really, truly gives you your directional bias very cleanly. If we're making higher highs and higher lows above VWAP, you are to be looking for longs. even if you get a deep pullback into VWAP, that's only a better opportunity to get long. So we align ourselves with the trend. Now for me, I like to get most of my size in the morning. So what I call it building a core position. I would prefer to get in my positions earlier in the session. Say for example, I'm taking it, and that's why I have this dashed line on the screen, is every day my goal is to wait for a clear defined direction, which today was long in the NASDAQ, clear defined direction, and I'm looking to put most of my sizing and position on in the early session of the morning, the opening drive. And then after this line on my screen, I'm really just managing my trades. I'm just holding what I've already entered in the morning. So at that point, I'm just riding the trend out. I'm simply just letting the price action work for me, and I'm letting it pay me. So I'm interested in getting in on this side of the screen in the morning session, and we'll say A. So in section A, I'm looking to get my size. Section B, I'm not starting new trades traditionally. I am instead typically looking to manage existing trades I already have open. So that's how I break down my morning. I'm typically looking to put most of my sizing on and that opening drive. To me, the clear sign to get with the trend today was actually this first pull into VWAP. Because if VWAP is ultimately the deciding factor of who's in control, we can look at our 30-minute and go, buyers were in control since this swing low last night, right? And our 5-day trend EMA is clearly pointing us in a bullish bias. So if I looked at my 30-minute first and did that top-down approach, the first time frame, the first time of the day in the NASDAQ that told me that, hey, we're aligning with that thesis is right in here when the VWAP held. VWAP holding is a huge tell that today we're likely going to see longs in control because sellers tried to hold it lower in the morning and couldn't. The point of control, the VWAP held on that opening short price action. It held right into here. Yes, we dipped below it, but that's okay. Shorts are allowed to come into the market and make their attempts, but it's how we respond to that. Because the sellers could not start breaking below VWAP firmly and holding, like if we were breaking and making lower lows and lower highs below VWAP, suddenly I'm interested in going short, and with reduced size, because that's counter to the 30-minute trend in my opinion. But because we held VWAP, this area was the first sign to tell me like, hey, buyers are in control today, and I'm looking to get interested in a area to define risk because we're holding VWAP in the direction of the trend. So ever since this point in the morning, I'm looking at as, where can I put my stop loss? Where can I get in to ride out the momentum of the day? So if I'm looking at this, you could have either entered right on this reclaim of VWAP, and you can target your 1-to-1, however you want to trade it. But essentially, institutional traders are taking this and they're riding these contracts out until major levels are hit. So they're taking these trades as a bigger picture like this. And our job as a scalper is not to necessarily catch the entirety of the whole move, but we identify the move using the higher time frame, and then we zoom in to actually scalp the momentum that's being handed to us. Also, if you guys have any questions, I see viewers in here. Timothy, I'm glad you joined. I really appreciate you. But I also see other viewers. If you guys have any questions at all, feel free to reach out in chat. I want to be able to help people actually improve their trading. So if you have questions, feel free to ask. I'm an open book. I'd love to answer them. I also don't know, as I'm a new new to streaming on YouTube. I don't know if this is fully going to just be recorded and people can watch this after the fact. If so, welcome in. That's awesome. This is a new channel. And my goal is just to simply help traders get educated on building a process, following a plan, and trading with the trend. I feel like my way of trading is just like one way to do it. There's so many ways to be successful in the market. As long as you have expected value that's positive, you can make money. And that's so cool. So many people, it's so dynamic. There's so many different styles of traders out there, whether they're like intermediate traders, scalping, long-term momentum traders. You've got swing traders, intraday traders. All of these people are trading together. And the more you align yourselves with the masses, the more you're going to feel the edge in your favor. So when I took my trade today, this 2-to-1, I could feel buyers in control of the day. I could see it on the chart by being strongly above VWAP, but also by holding my EMA. So I'm identifying a bias in direction, but honestly, what the facts are that the price action on what's happening right now is actually telling me that buyers are in control, and I'm allowed to put risk on if opportunity gives me a good area to define my risk. So for me, that's below swings. I see all these little pullbacks where sellers got in control of the market for just a few minutes at a time, and buyers stepped in really quickly, and boom, they're right back in, driving prices higher. So I don't know if you've noticed, but I truly like to have the color of my candles in the direction of my bias. So if you haven't already noticed, the color of my candles are kind of unique. They're colored by where they're at versus the EMA that I follow. So if I go to the 30-minute chart and I see green candles, I instantly know green candles on a 30-minute chart tells me that I should be looking for longs, that I am to be buying with a heavy preference on longs only. Not that I couldn't take a short, but at the very least, if my bias is long off a 30-minute chart, and then suddenly we're breaking down really heavily after an extension, at least I can go into a short knowing that I'm fighting the trend. Then I shouldn't stay more than I shouldn't overstay my welcome. If I'm fighting the greater trend going short, you want to make it a quick and short-lived scalp. And I feel like that suits a lot of traders really well. So for me, until we extended far away from VWAP, like right now, my indicator's telling me we're 7 ATRs away from VWAP, and the price action's telling me we're headed back towards it. We're headed back towards the average. So this was really, truly the first point in the day where if I were to go short, I would want to see things breaking down more clearly, where we're failing at the highs. We're seeing the EMA holding price action very cleanly. Like all of this consolidation happened below my EMA. And I might change the color of my drawing tool here. Let's make this easier to see. Maybe white or red. Let's do white. Okay, so all of this price action here, this consolidation, was holding so cleanly below the EMA that I watch. So by it holding so cleanly below that level and respecting it, that's telling me, that's a big indication that sellers are in control right now and they're not budging. You also have things like the sideways consolidation that they're forming. Sideways consolidation is awesome. It's one of my favorite things to see when I'm looking to enter, because sideways consolidation truly tells me that it's unusual trading activity, that there's this tug of war going on in the market, and if you position yourself on the right side of the trade, that this could be a good opportunity to define your risk and get into a quality setup. So for me, I would like to see this break down a little bit more if I were to go short. Ideally, I would want to see at least half the distance to VWAP traveled before I go short. So, and that really just proves to me that sellers are strongly in control, because we're in a day that buyers have been heavily, taken over. So because they've been so strongly in control of this market today, I need to see it breaking down very heavily on higher than usual volume. And we're starting to see that in the volume indication right here. Volume's picking up as the move is running out of steam. So this is the first point in the day where I'm actually interested in going short. But since it's against the trend, and the trend is, by my definition, long, and I can tell just by looking at my 30-minute chart and going, obviously that's a strong sloping EMA. We're above that EMA, and we've been making higher highs and higher lows. It's a fact that buyers have been in control for a period of time now. And because of that, I have a long bias. So because of that long bias, if I were to take a short here, oh, that's good. If it's recorded automatically, that would be awesome. I'd love people to just be able to hop in and rewatch live trades that I've taken and sessions that I've had. So that would be cool. But if it's actually breaking down more from here, that's where I get more and more interested in taking a short. What I would like to see is a really big breakdown. I want to see really big candles, very decisive on volume. And I want to see a really clear level I could define my risk. A really nice swing into the EMA, stair-stepping pattern as we travel back to the average. Okay? Now, if I did take a short here, because it's counter to the trend, I would take it on much more reduced size. Think of it as like half or a quarter of the size you'd normally put on. Because you're fighting the major current, we want to take less risk. So we want not only to stay in the trade in a shorter distance, taking something like a 1-to-1 would be ideal, 1 to 1.5, or targeting VWAP. You want to be in and out very quickly, and you want to do it on smaller size because we're fighting that larger trend. Hopefully that makes sense to you guys, but ideally, you want to see things breaking down in a big way. If you're going to be fighting the major trend, you really need to see more confluence, that the move has got enough steam to actually do what you're looking for it to do. Because what's to say this couldn't just be another pullback in a larger trend? I mean, because right now, that's realistically all it is. I look at this and I say, the counter trend's in. Counter trend's happening right now. We're clearly short. But the moment that gives up, if we break this downside move, if we start to break that, I could then look for an area to define my risk and put a trade on, where I would do my 2-to-1. You see what I mean? That way I'm aligned with the trend. Instantly, that puts me in a position where the current's at my back. It's kind of like if you had a sailboat and the wind is just like really picking up behind you and it's just like lifting and carrying you. You really want to align yourself with the trend so that you can have the wind at your back. So you have increased added percentage of win rate. It's giving you expected value. It's giving you edge. It's increasing your edge by having that momentum at your back. Now, right now, obviously, we're clearly breaking down, so no longs in here yet. At no point below this EMA am I interested in taking a long. We need to see the downtrend break and that trend change for me to get interested in going long. So for now, this is definitely a short game. But because it's counter trend, we either need to see a huge momentum kicking in and really see this breaking down on high volume, which is not truly doing. It's getting there, but we're really just trading sideways. I like to see, again, at least half the distance to VWAP being broken. So if I were to be interested in this trade, it would look something like this. And then I could put my stop right on those other, above those swings. And then my target would be VWAP, the average. So I want to see this breaking down even more. I want it to speed up and really just show deconstruction of all of this price action that's been put in of the day. So I'm going to take a minute and go get some coffee. I appreciate you, Timothy, for hanging out. I'll be back in just a few moments. All right, I am back. So, as you can see, guess what? Who's in control already? Who's already trying to regain control of the NASDAQ? The buyers. Why? Because we have a really strong buying preference today. So it's really hard to go short when you're fighting that strength. And that's why a bias is super helpful. It's going to increase your win rate. Developing a proper bias is essential because you know what people are truly watching? They're waiting for this trend to break. The moment that downtrend is over, you can notice that it picked right back up where it left off. Now for me, there's not enough meat on the bone to take this trade. It's inside other, it's not like a new explored price action. This is all inside price that's already happened today. So unless we're breaking to new highs above previous price action, I'm not super interested. But people can take this trade and do something like this, where they're taking a break of this level with a stop below the lows, and they could be targeting a 2-to-1 They could be targeting a previous day high, a retest of that. I personally would probably lean towards targeting previous day high. Just because that level is right there in front of you and it's a major level. So I would cut it a little short and close it out just before. So I would have looked something like this had I taken that trade. Now you can see my indicator is actually giving us the okay to take this trade. It's saying, hey, you can enter in, but with a warning. Do you see how like the colors are orange? It's saying, hey, I can trade my long because this is like after looking for a pullback and resumption, but I want to go on normal size because the distance, the ATR, we're so far from VWAP that VWAP's like a rubber band. We're going to snap back to VWAP at some point. And you can see it's starting to get weaker. The trend's weakening. So it's dangerous to take trades in this position. So even though we saw this quality little trade, and people probably took that, that's why it's happening, it's not the trade for me and my strategy. I preferably want to get involved in this section of the morning. All right, so examples. Now, how do I decide when to trade? Not just the direction, but timing. So, for example, I call it being on the right side of the V. I don't know who claimed that term, but being on the right side of the V is so important. What's up, Cloud? Appreciate you joining in. This is a new stream. This is honestly my first day streaming live on YouTube, but everything was screaming at me to start doing this officially. There's so much interest in my indicator, so much interest in my strategy and my teachings that I've decided to sit down and actually start sharing this with people. So welcome in. Feel free to ask questions. This is here for you. People like you that are here to interested in learning and growing, or even just getting a different perspective on what somebody else might be doing in the market to capture profits. So, what's my process, right? Heck yeah, that is awesome. Okay, so you're friends with Tim. Dude, that's sick. You guys are awesome. I'm so glad to have you in here. I honestly didn't expect to jump into Tim's, Discord this morning and it just like opened my eyes to see how much help I could truly offer to traders. It was just a super eye-opening moment this morning where I was just like, okay, that answers it. Even if I can be more successful trading than I am currently, all of the stuff I've learned already could be summarized and taught to somebody to help them succeed so much faster. And so here I am. I decided officially, let's do it. I'm just going to start teaching people. I've had enough family and friends and people I've just met like Tim to tell me that there's enough interest and reason for me to do so. Yeah, so you need a consistent process to scale. And that's where a lot of people get caught up is imagine you're a profitable trader, right? But your profitability might come and go a little too, randomly. And so because honestly, this can be a little bit like gambling at times. If you don't have a very consistent approach to the market, you can imagine where you're like everybody statistically just might see more success at some times than others, but we want to dial that in so that there's a reason it's more successful at certain times and you hammer on those successful moments. So anyway, what I want to get into is showing you timing. Why would I sit down and zoom in on a 2 minute or even a 1 minute, chart? What's the reason behind it? For me, I want to go look at the 30-minute chart and see a clear change in direction. So for me, if I were looking at this 30-minute chart, you can see visually right into this area where buyers were in control and sellers started to take over. There was a handoff. And it's like, to me, it's a V shape. In this case, it's upside down. But if I were to show you this V shape, clearly buyers were no longer in control after that extension was made. And so if I were to zoom in on a 2-minute chart, I could start to capture this portion of the market when things were really picking up in momentum. And if I could do the same right here. If I were to draw a trend from that move, where did it start to turn? Well, it turned when that trend was over, when it ran out of steam. So if I zoom in on a 2-minute, guess what? This is the first point on the screen where I would be interested in going long ever since this point on the screen. So to me, it clearly gives me timing and direction in such a clear manner by leveraging both a higher time frame and a lower time frame. If I use the 30-minute and I say, hey, we're downtrending this move, you can follow this trend down, and I can update my trend line. You don't need to draw the trend line. You can do this with your eyes, but if you follow that trend, what happens? You can clearly see points where we're breaking down. Break of this level, a clear short. Okay, obviously the market closes, market reopens in after hours. Asia sessions open at 7 p.m. What happened at 7 p.m.? If we look at Asia open, look at this level as it breaks. As that level breaks, momentum kicks up in a huge way. You're seeing volume really peak up. And we know what direction, we're just continuing the move that's already in play. Okay, so as long as we're in this trend, we're not to be looking for longs. Even if there's long opportunity that you see, like a lot of people might go, well, you can go long into these little micro pullbacks. There's, 10 minutes at a time, 20 minutes where you could take the counter trend. But to me, that doesn't offer enough edge or advantage. To me, this is short until that trend is over. So for me, I would position myself in here taking these swings at a 2-to-1, and I would do 2-to-1 and trail. So my trades might look something like this, where I'm catching these deep pullbacks and resumptions of the trend. And you'll catch these all day long at a 2-to-1. And you can see how traders are taking this too. I mention this often, but if I zoom in on the 2-minute, where did price go after this pullback? This pullback led to a bunch of people getting in and taking profits at a 2-to-1. When those orders were taken up, we got another pullback, and you can see, like, it wasn't the cleanest. The trend is your friend, absolutely. But you know what? I think the hardest thing for people to figure out is how to define the trend. Dude, I swear, what people struggle with is just understanding how to define the trend, because it's a little confusing at first. Okay? So when you trade with the trend, you need a clear way to define it. For me, I use a 5-day representation in an EMA. So 5 trading days. For the last week, 5 trading days, was the market up, down, or sideways? Well, on this point of the screen I'm showing you, it was pretty flat. You can see the EMA was pretty flat. So I don't tend to have a strong bias in either direction. I just let the price action tell me. When the EMA is flat, I'm literally more reliant on the 2-minute to tell me what's going on. The 2-minute is screaming at me in this area. We're below VWAP, sellers are in control, and we're holding my EMA in a strong manner. You can see these wicks, even at the end of the move. These wicks are sellers stepping in and saying, no, price has still got more room to go. We're not done selling. Sellers are still too interested. So again, you take an entry on the resumption with a stop below the or above the swing, and you target your 2-to-1, and you're just catching these trades left and right. And my indicator helps me with this. I'll answer your question, Cloud. What size do you trade, and do you copy trade? So I have a sizing system, and I use my indicator to help guide me. So I'm going to hit replay and actually replay this little Asia session scenario with you, okay? So I'm going to hit play. We're going to just play this back. We'll run it back. Already, my indicator is telling me hitchhiker short, which is telling me what trade to take. It's telling me what size I should put on. Right now it's saying grade C, half size. So if I, for example, normally risk, say, 10 contracts, at half size, I realistically want to be looking at 5 contracts. Now, to me, a C grade trade in my playbook, I don't take C grade trades. I only put size and risk on B and A+. Well, B, A+. Anything B or greater, I can take. If it's D, C, or F, I skip those. Okay? And the reason you would skip this is because it's counter to the trend. And the trend is neutral right now. So my indicator's going ahead and checking all of those things for me. It's telling me the trend is neutral. There is not a strong enough bias, buying or short. Long or short, it doesn't matter. There's not enough bias behind this move to give me enough advantage to put full risk on. So it's warning me already. Even though it's saying bearish, hitchhiker short, I could take this. I'm not interested. It's not giving me enough reason, enough advantage to do so. Now here things change a little bit, okay? A few candles later, on the same move, my indicator is now saying my hitchhiker short, but it upgraded the grade. It is now saying I'm trading with the trend, and it's saying, even though the key level is not, yes, I custom made this indicator for my strategy. So right now, my indicator is recommending B grade, normal size. I am allowed to take this trade with reduced sizing, essentially normal, right? And so not the maximum amount you would give. You need to define, everybody's risk is a little different, but you need to define what an A grade, B grade, C grade, or D grade looks for you. Because if you bet all of your trades the same, your results are going to be super lackluster and inconsistent. You need to be able to learn to put the foot on the gas when things are in your favor, right? Put it into like a poker analogy, okay? You're playing poker and you've got pocket aces, okay? You have pocket aces and there's aces on the flop. You know you need to be betting bigger, right? You can see the cards in front of you. Trading is no different. You can see what's happening in front of you, and you need to learn to escalate your bet sizing when opportunity is at its best. So I built a system, max size when you got pocket aces. So when you're doing that, you're aligning yourself with a mathematically sound way to trade, where you're putting your biggest bet sizing in on your best trades. And the ones that aren't your best trades, you size smaller because their value is lessened. So because their value is lessened, we put less risk on. Okay, so I'm going to click some replay. We're going to do a little more here, but you can see the grade of this trade is increasing as time goes on. Okay, that for me right there was the entry. Did you see how sellers responded when we came into that EMA? Clearly, sellers stepped in a big way. We have a jump in volume. And I like colored volume. It's called relative volume. It's colored based on the average. If if you take a baseline candle of volume and then suddenly the there's a candle that's actually increased above the average, it's going to color it differently for me. So things like the purple volume are what I would call like extreme, red is like high, and then yellow is still elevated, but you can tell like the gray, blue, and greens, those are below, and they're more like average and below average volume. So I get interested at those points in time where volume escalates. Okay, so I'm going to put my little arrow right there on the volume candle. And then if you look at the candle itself, wasn't that a super firm, decisive candle resuming in the direction of the trend? The trend is defined by the slope of our EMAs, right? We're below VWAP. We know sellers are in control. We're below my EMA, and we respected the hell out of it. Like literally, as price came back into it, we consolidated a little bit here, and we wicked through it, but we closed firmly below. And look at this next candle. Boom. This is my entry. Anywhere on this candle, I do not care. The earlier, the better. But as soon as you see volume coming in and the trend is resuming, I take my 2-to-1 in that direction of the trend. So my trades look like this. And my indicator's telling me I can take this trade with normal size. Okay? So boom, we're going to press play. Let's see what happens. We're getting some consolidation. Our take profits hit. And the move's still going. Now, because this was counter trend, it wasn't like, even though the trend was down and we were clearly trading in this like direction of the 30-minute move, to me, it's still counter trend, because if you went to a daily and you looked at what I call the trend, the 5-day EMA, on the daily, nowhere in here does this tell me I want to be going short. I have a very firm bias on the NASDAQ right now of longs only. For weeks now, these are daily candles. For weeks now, as long as we're holding this uptrend, I've got that strong preference of longs. If I were in like gold, okay, the trend isn't super clear, then we're relying more on the 2-minute, more on what's happening right now to define the direction. But on the NASDAQ, it's a little special exception. We have a very strong trend on the NASDAQ. We need to be aligning ourselves with those bigger traders, because you've got swing traders, intraday traders, all of these people. You've got hedge funds, prop firms, all of these people are clearly saying that there's demand for the NASDAQ and that price is increasing. So I don't want to fight that. So even though this gave a downtrend, even though this is giving me some like B grade trades, I still am not willing to stick around and trail any sort of stop loss with this. Normally, I sell half of my position in a 2-to-1 and trail the other half. But because we're trading against that larger trend, I'm not trying to overstay my welcome. I'm closing 100% of my trade at that 2-to-1. So officially, my trade would have been out right there, 2-to-1. I'm done. Now, if more opportunity comes up, yes, I could take another trade, but I'm not looking to trail this position. I'm closing a full position. You said, do you wait for a strong confirmation, candle confirmation at the EMA? I look for a combination of things. I do wait for the pullback into the EMA. So even though my indicator's telling me what trade I can take and what sizing and yada yada, think of it as just, hey, giving me a heads up that a trade area, that we're in a good trade area, but I need to wait for an area to define my risk. So I wait for that pullback. We got right here, this counter trend, pulled back into the EMA, right? And you can see it visually with your eyes, right? Do you see what's happening? If I were to like smooth out the price action, it's that V shape. It's upside down, yes, but it's a V shape. And it held into the EMA. Oh, I can explain to you the color of my candles. Let me get into that in a second. First question though, you said, what defines my entry? I look for a strong candle resuming the trend. So the first selling candle, first strong selling candle was this one, right? And if you were to draw a little trend line showing that trend, it looked something like this was the pullback. Okay? When did that pullback break? Right into here. So you can get involved pretty much anywhere in that candle is okay with me, as long as you're seeing volume at least matching the candle previously, and anything above that is extra confluence. To me, this candle being something like 30% bigger than the last candle is 100% what I want. I want to see an increase of volume. I want more participants in the resumption of the trend. So I'm interested, I'll get long anywhere in this candle. I don't care if you get in when the candle closes. I don't care if you get in right as it's beginning and it's starting to spill. That doesn't matter. What matters is you always use a 2-to-1 based on your actual entry. So let's say I may be more experienced with this and I get in a little early. I do my 2-to-1. Okay? But maybe some traders are late to the party. So they got in at the candle close. Well, they then need to target a 2-to-1, so the math is in their favor based on where they entered. So that does put their 2-to-1 much lower. Does it end up getting hit? I can guarantee it probably does. We'll hit play and see. But it's important to structure yourself. That took a while, but it did get hit. You have to structure yourself so that you are mathematically sound. We trade with expected value. We would trade with math on our side. If you don't have something like a 2-to-1, you're really selling yourself short. You need expected value to be higher. So to summarize, I look for that pivot, that change in who's in control. To me, it goes sellers are in control, buyers are in control. When the sellers take back control, that's when I'm interested. So it's that handoff. I call it kind of like handing the baton. You know, there's like people and they're running and they do like the little marathon and they're like handed the baton to the next person. The buyers just handed the baton to the sellers. The sellers started running with it on volume in the direction of the trend. My indicator's telling me, yes, I'm okay to take it. I've got enough confluence. I'm allowed to take this trade. Okay, let me delete some of these. Now I'm going to show you why are my candles a certain color. Thank you, Cloud. I appreciate you. I'm all cracked up on coffee, so if I'm talking too fast, let me know. I'll chill. I love teaching people. This is fun. Plus, my trading day's over. I've already snagged my profits. What else am I going to do? I can go screw around, play some video games or something or whatever. But, like, surrounding myself with more traders is only going to help me improve. I'm going to help others improve. And I love spreading that value. Like, there's so much that I can see, like, people are going to be able to take from this and fast track their success. I love that. Okay, so candle colors. I color my candles based on where they're at regarding the levels I'm watching. Okay, so let's look at the 30-minute for that. The candles are green when they're above my EMA, my 5-day EMA that I track. That tells me very quickly that I should be interested in longs with a heavy preference. So without even putting very much thought into it, I know green candle on the 30-minute is long preference. Black candles, short preference. Okay? So if I were to look at this, let me show you some good examples, okay? This period here, you would define the slope of that EMA as bearish, right? For this week, we were clearly trending downwards. So for that week, my strategy kept me with the trend, the 5-day trend, and it was bearish. I'm looking for shorts. So I then look for when the buyers take control and then they hand off that baton to the sellers again. And on a 30-minute chart, you can just do some really quick technical analysis to see where those areas are. And I'm just spitballing this, but do you see these little trade-offs of this is counter trend happening, and when the trend resumes, I'm zooming in on my 2-minute looking for more black candles. So black candles tell me short bias. When do I trade? After the V, on the right side of the V. The right side of the V for me is when the transition occurs between selling and buying, or buying and selling, when there's a clear transition from one side to the other. So look at this, right? Black candles, I'm looking short. But ever since this point on the screen, buyers were in control. But since that's counter to the trend, look how sloppy that was. Wiki, eating people alive in there. But the moment we're trading with the trend, look how clean and clear these 30-minute candles are. They're stacking up like Legos on top of each other instead of next to each other. And that gives us edge. That gives us new price discovery. That gives us our ability to increase our chances of being right on the trade and not being stopped out early. Okay? So black candles, short preference. However, sometimes just because the candles are black doesn't mean that there's not buyers and buying happening, but I wait for that buying to end. And so right in here, I get that first clue that, hey, sellers are starting to regain control. Now let me take this. I'm going to go zoom in on a 2-minute chart of that same area, okay? So give me a second. I got to go find it. What day is this? This is Friday, May 15th. Okay, yep, I found it. So if I zoom in on a 2-minute Friday, May 15th, I'm going to get a closer look at this trend, and I can fix my trend line, make it a little cleaner. Okay, because the 2 minutes got a little bit more accurate, right? Okay, so in here, I can see the same story on the 2-minute. VWAP is flat, horizontal, VWAP's flat. Nobody's truly firmly in control here. I would say yes, buyers are more in control, but you can see sellers are super interested, and that's why it's giving these like big back and forth range like price action, okay? So I'm not interested in any of that. I'm interested in this area right here on the left. So now that I've got that highlighted where that trend is breaking and sellers are firmly regaining control, look what happens. Now this was US like closing session, okay? But if I were to highlight that area, what happens? Okay, let's look. We've got a clear breakdown to VWAP, bam, into the average. You've got a retest behind that trend line and a continuation. So for me, where's the first point where I could really truly define my risk and get aligned with the short trend? Right here, with a stop above that swing, and I can target my 2-to-1 plus trail. I can trail this one. But we target our 2-to-1, and boom, we're nailing this trade. Where's our next opportunity to get in? Let's say you missed that. You were late to the party. You wait for the pullback. Where does that pullback happen? Right here into VWAP. Boom, look at the resumption candle. I'm going to zoom in a little bit more so you can see this. Look at that resumption candle. Full-bodied, firm, it's not wiki. Do we have an increase in volume? Now, this is not a requirement for this to happen, but yes, we have about a 30% increase in volume on this candle versus the last. I'll go ahead and highlight it. You can see the previous candle volume was right here. This one's about 30% higher than the last candle. Okay, so I've got, and let me even hit my replay here. Let me select bar. I'm going to replay this. What does my indicator say about this? It's going to tell me no trade because we're too close to VWAP, first of all. There's not enough edge. And that's okay. What's it say about the next opportunity? Oh, it's giving us the green light that we could potentially take a trade. Let's wait for a pullback. Oh, well, market closed. So be it. If we didn't catch it on the first one, you could have gotten involved in a break like this. My indicator, even though it's good, it's not going to catch every single move. But here's a perfect little 2-to-1 we could have taken into this consolidation. Okay? What I'm looking for is a level break. If you notice, this point right here, candles started stacking sideways. Sideways consolidation is good too. It's actually better. I rank it higher than these pullbacks that are sharp. Do you see how this pullback, it was like more of a buyers were firmly in control during that pullback? An even better version of this trade is when you're getting sideways consolidation, like right here. Sideways consolidation, breaking consolidation. Sideways consolidation, and it's showing that the move's really strong. Breaking consolidation. Okay? I'm going to delete my drawings and let me read your question here. You said, do you always start your analysis at the 30 minutes chart going downward to the 2 minutes, or you start even higher like a 4 hour or the daily? That was a good question. So what we call that is multiple time frame analysis, MTF. So with MTF, you're doing a top-down approach. Okay? I personally, all I need to develop a bias is 2 charts. A 30-minute with my EMA and a 2-minute for entries. I do occasionally filter out what is my preference of ticker to be trading based on the daily with the 5 EMA. If I look at trading view, you can see the 5 EMA is plotted on the screen, and the colors of my candles are colored based on the 5 EMA as well. So that being said, look at NASDAQ versus gold. Don't you see a clear winner with regarding strength behind the trend? Wouldn't you say that the NASDAQ is like ding, 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 obviously the better chart to develop a bias? Because if I were to say trade gold, here I call it more of a 50-50 ratio where buying and selling is a little closer together. It's not such an advantage to pick a directional bias. You've got these windows of opportunity where sellers were like firmly in control. And yes, a selling or short bias may have been like really good for these days. But the daily does give me a really quick glance at that same trend that I'm tracking on the 30-minute. Okay? So I can quickly look at crude oil, I can look at gold, and I can see they don't compare one bit to the NASDAQ's trend. Okay? So that's what I use my daily for. You can do this on a 4 hour. It only gives you more definition. But you don't need to go in and look at all of those levels. Do I need to diversify into other instruments? It depends. You need to know that there's times, just because the ES is almost exactly like the NASDAQ. They're really very similar. And there's going to be months at a time. Imagine if you're only trading the ES, imagine what's happening during this time period. Okay? There's no clear edge in the market during that time frame. So unless you're an experienced trader and you can go, hey, I only trade the ES, but the ES is unfortunately twisting and turning every other day, and giving a very unclear directional bias, you need to make sure that your strategy aligns with a non-bias environment. Meaning maybe you're looking at trading reversals. A reversal strategy where you're trading supply and demand or something might be stronger and have a higher win rate when things are choppy on the daily like that. Now, for me and my strategy, I look for momentum, okay? So things like the NASDAQ lately, where it's been trending really strong, gold, when the trend was really strong, my best, in my career so far, my best trading opportunity was in gold and silver during these days of the highest trend that we had, where gold reached nearly 6 grand, okay? And the demand for it all year was pretty heavy. Like, if you look at this, the entire last, like 2025 really, for gold and silver was a super long bias environment. And so that gave me, along with like some clear level breaks, a really good opportunity to get long with the trend and make some huge trades, monster trades. My best trades in my career happened because gold was trending so cleanly. And I'm seeing that right now with the NASDAQ. The NASDAQ's offering a similar environment, so it's got my focus. If you were to kind of like highlight this, I'm interested in these areas where the bars are stacking up. Okay? Now compare that to the NASDAQ. Yes, it's had some choppy months, but right now we're in a trend. So that puts the NASDAQ back on the map for me. Where then I've switched focus from gold, because guess what? When the NASDAQ's trending, most likely gold and crude oil are ranging. And if gold and crude oil are trending, the NASDAQ will likely be ranging. So by diversifying my portfolio and the tickers that I'm able to trade, I can better align myself in an environment that gives me an advantage. You can see crude oil had some good opportunity as well, and hence why I have it. You can see where weeks at a time you might have been able to develop a very strong bias and zoom in on the 30-minute and hourly and catch some awesome trades, right? But besides that, if you're not timing it appropriately, look what's happening. You know, for all of these traders that may only trade one chart, they may not be realizing that this is just ranging. Ranging environments are okay, but you need to have a strategy that thrives in a ranging environment. Now, for me, my strategy does not. I do not trade in a ranging environment because my hitchhiker trade does not thrive in it. Yeah. Do you ever just sit there and wonder, like, what's going on? Why, your strategy is just not working as it normally does? Zoom out. Zoom out and see what's going on. So for me, also crude oil looks really good right now. I've noticed the last couple days, it's given some good opportunity for my strategy. But this is exactly what I'm looking for. Like, with just a glance. If I were to start on the 30-minute, and I don't even need the daily, right? If I were to start on the 30-minute, I would say that ever since this low right here, buyers have stepped in and they're in control. We're making higher highs and higher lows. We're above my EMA, telling me directional bias. My colors are green. I'm looking for longs. Easy. Very easy. Bars are stacking up, telling me it's a good time to trade. Now I go zoom in on the 2-minute, okay? And look at this same move with more definition. You've got this clear pullback. Guess what? Into VWAP. VWAP holds all the time. It's like the number one support and resistance that you can have on your chart. This is where most institutional buyers get their average entries. Imagine trying to fill hundreds of thousands of shares, okay? Those traders, they want to get filled as close to a fair price as possible. Where is a fair price on the screen? At VWAP. Okay? Look what happened. We came into VWAP. The trend is obviously bullish. Just because we're seeing a pullback, we're just waiting. When that pullback ends, what happens? Our EMA fan out. Our EMA and VWAP fan out. You see this kind of like they're both... We got this upward slope to VWAP. I'm going to zoom in a little bit more on the 2 minute to give you guys a little better picture. Do you see that fanning out that's happening? My EMA is pointing very clearly with a strong slope. Saying it's signaling ding, 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 momentum strong. Who's in control? Based on the 30-minute, buyers in control. Based on the 2 minute, buyers are in control. We're above VWAP. And guess what? VWAP's rising. If we draw a horizontal line right here, what's that purple line doing? That purple line has a slope to it. It never has like a super steep slope. Like looking back, if you trade with the VWAP a lot, you never really see it super clearly sloped. It does, but not as often. A small slope in the VWAP is a big influx in buying. Okay? But that's why we use something faster like an EMA. So for me, the first point of interest on this chart was, hey, we held VWAP. Bam, we bounced, held VWAP. We are now breaking that downtrend that we saw on the 30-minute chart. This all held as a downtrend into VWAP, and then boom, this explosive move is happening because institutional buying is happening at the average, at VWAP. Boom. So this is happening, okay? I don't have to predict anything. I'm just watching the momentum fall in my lap. This is happening real time, and I just want to get into this move. Well, where do I get in? On the pullback. The pullback into my EMA. And to answer your question, my EMA that I track, I am tracking a 9 EMA on a 5 minute. But I use a 2 minute chart with a 22 EMA. This is a 22 EMA. I'm tracking that same 5 minute 9 EMA move with more definition. Why? Because I want to better nail that entry for when price is resuming in my favor. Okay? This is a 22 EMA. Now, in my indicator, it's got all this stuff for me. Like, if you used my indicator, for example, it's going to plot this on your screen. It's going to put VWAP in purple. It's going to mark the 22 EMA on the 2 minute. It's also going to plot the previous day highs and lows if they're close by, and pre-market levels as well. So this white line, if I go to replay, do you see this white line on the screen? My indicator put that on the screen telling me, hey, this is an important level to watch. Not that I need to take trades around it necessarily, but I need to make sure that if I'm entering, I'm giving myself enough room that we're not about to hit a ceiling. Okay, so we're above this level. I'm going to press play. My indicator's giving me the green light. I've got aces. I can go full size. We're with the trend. We've got an A grade setup. We're with the trend. We're above key levels. We dipped below it for a second there. Okay. And then boom, when this resumes right here, I'm going to pause it. I can take my trade. Buying is resuming. It's holding. Volume's coming in. And I can put my stop between that, below that swing. And I can target my 2 to 1. And we let it play. And I'm letting my indicator give me that confidence that, hey, we're in an environment where momentum's clearly picked a direction. I'll be right back. Alrighty, I'm here. I had to let the dog out. It's really cute. My dog rings. She's got these little bells on our back door. She'll go ring the bells, and she tells me that she wants to go outside. Okay, so I'm going to press play. We're in this trade. We're looking for a 2 to 1. Let's say we're risking $100 to make $200. We don't have to manage our trade. We don't need to exit early. Boom, we're out of this trade already. 2-1, slap that take profit so quickly. We were in this trade for 2, 4, 6, literally like 20 minutes. 20 minutes you're in this trade and you're done. You've snagged. You can make this your one trade of the day. In time, you can scale that up. You don't need to take 50 trades. You can take one trade and make a living. Less is more. Less is more. You just need quality, not quantity. Where am I from? I was raised in Kingman, Arizona, which is the middle of nowhere, literally like desert town, population 5. I currently own a home in Oklahoma. My wife and I bought a inexpensive house so we can retire early and live free. So I have a current residence in Oklahoma. What about you, Cloud? Where are you from? I'm also going to hit play. I'm going to see what the next opportunity was. I see a trade within a trade, but I'm going to just hold out, see what we get here. Okay, we're getting a pullback. You can see sellers are, for the first time in like 30 minutes, sellers are now, the baton's been passed back to them. You're in Canada? That's awesome. I lived in Seattle, Washington for a while, and we like literally lived right below Canada. I was maybe 30 minutes from the border, but I never went into Canada once, funny enough. Not that I wouldn't have gone, I just was consumed with work, and we never made it up there officially. I think if I had a friend that like knew the areas and what to do, and getting in and out like cleanly with no problems, then I would probably be more down to like visit Canada. But my indicator is currently private. I am considering, because of all the feedback I'm getting, I am considering sharing my screen daily and allowing people to like view my indicator live. I'm considering letting people subscribe to it. I don't know how to do that or what to charge. I have no idea. But if you guys have recommendations, you can let me know. Why it's not currently on the market is because I know that though my indicator is awesome and super useful to me, I know that it's still got a few minor kinks that need to be worked out. So if I do have people like end up paying me to like use this indicator someday, I do want to make sure that they get live updates the moment I fix and improve things. So I want to make sure that that's like pushed out to all of them. And until I have that process down, I'm not quite making it available for everyone. Okay. Okay, so on this current price action, right? We've got a pullback happening. We're waiting for the resumption. It's kind of just starting to kick back up right here. You can see like a little curl in the price, but it's not quite like a firm buyers are in control yet. So I'm going to press play. We're going to see what the next candle does. If it's a big fat buying candle, nope. 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 We're still waiting. Nope. We're definitely not buying that one. Nope. Not on that one. And you might think, oh, we're below the EMA. We're below the EMA. Does that mean everything's over? The trade's off? Hell no. This just means we're getting a deeper pullback in the trend. That's like refueling. So I could just, boom, draw the counter trend, wait for a break. It does change the style of trade. Like technically, you wouldn't call this a hitchhiker anymore. This is now more of a move-to-move style trade where you're just trading in the momentum of the trend. Okay? So I would just, you can't call it the same thing, but it is ultimately the same goal in mind. We're looking to align ourselves with the trend. When do we get the alignment with the trend? Anybody see that giant fat candle screaming at you right in the front of your screen saying, hey, the trend is resuming? Guess what? We even have a clear level to put our stop loss. Okay? So we could take this with one little caveat. Okay? Let's say we entered long right here and we got to stop below this swing. We're targeting our 2 to 1. Okay? Watch this. Look at what my indicator is warning us. What is our indicator saying? Yes, we can take a long at the pullback. What grade are we giving it? A B grade. Why are we giving this a B grade? Earlier, this was an A grade just 20, 30 minutes ago. What's changed? We have a distance from ATR now of 9.57. We have now moved so far away from VWAP. Let me put it on the screen. Our distance to VWAP is a little too stretched to be wanting to get into a trade and like trail this out. So even though this trade could just go and go and go, because of my indicators telling me, hey, we've already got an extension from VWAP, that distance, it's giving me a warning by giving me all these yellow or orange color indications telling me be careful. If this was like full A size, these would all be green. But we're in B grade and it's telling me orange, 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 be careful. So I would take this with below average size. So let's say, for example, I do enter this trade. If we get stopped out, no worries. You don't win them all. But we're going in with smaller size. Let's say we do something like 1/5 or 1/3 of our average size. You know, you're going in smaller, taking on less risk because of the moves already extended. Let's see how it plays out. We almost got stopped out on that wick, but guess what? We're still in the trade, and that's okay. We don't need to micromanage. We let the price action, boom, we're done. Okay? We let the price action happen. We're not sitting there and going, oh, the price almost hit my stop loss. I need to close this out. Hell no. We need to trade like a machine. Okay? We tricked this trade because the trend is resuming. Because buyers defended that level. Okay? So what level needed to hold? Now, I'm using the swing. So the lowest point when sellers were in control, I go 2 cents below that roughly. Like if you think just like one little tick below that, that's actually where my stop loss was. So for me, my trade would have looked like this, okay? Because if you put it directly 100% on this line, it's more likely to get stopped out. If you put it 2 cents below it, you can count on, if this trend holds, that your stop's less likely to get hit in that spot. Do you wait for the candle closure to stop out? Okay, so I don't manage this trade. Where'd my take profit go? That's weird. Oh, there it goes. I'm not managing the trade. If I get stopped out, it's because I have a limit order already at this level. So imagine on because I have 2 monitors. So I use TradingView on the left, by the way, and Top Step on the right, or your broker or whatever, okay? And so on this screen, you can see where my stop would have been. It would have been below, 2 cents below that swing. And so yes, price came near it, but this is exactly why you can't manage your trades, okay? Not that professionals couldn't do that, or in time you couldn't necessarily work up to that point. But as a new trader, somebody might have closed this order out at 99% of their take profit and didn't give it the real room to actually make this trade happen. Because to me, as long as price stays above my stop loss, this trade is still valid. That's why it's so important to make sure you're putting your stop loss at the turn, where buyers and sellers change to who's in control. Because if you get stopped out, it's probably for a good freaking reason. If you got stopped out because your stop's down here, It's because the move's likely over, running out of steam. And we don't trade in an area where it's running out of steam. We trade in areas where it's strong and showing strength. Right? Okay, so for me personally, this is too far extended from VWAP for me to be entering in new trades. I'm no longer, whatever the price action happens the rest of this day, I'm not looking to take any more trades. Preferably, I would have gotten all of my size down here. Right into these candles right here. With a stop below VWAP. You manage your trade by trailing it in this move. And that's the A++ version of this trade. But as a scalper, it's okay to take these small portions, aligning yourself with the right direction and momentum. Right? So for me, these little pullbacks are opportunities to scalp a little bit out of the market. You'll see this so often too, you know. And so imagine like just picturing this move, right? Where you've got the 9 EMA sloping up and price holding it. You've got VWAP way down here. Watch how many days I could find that do that same move, okay? Right? So there's we were just looking at today's price action on crude oil. So those were live trades that like for today that could have been taken using this strategy. But let's go back. Let's go back and let's look at a different move, okay? So this was the prior day. Guess what happened? The 30-minute green candles, long bias. Pullback happened. When that pullback ended, when did that pullback end? Right into pre-market. Do you wonder why all this buying happened? Not really. You know exactly why it happened. It was the first time that price aligned with the trend into a major level. We reclaimed VWAP, and this was the area to really truly get involved. Look at the volume. Look at the volume. These are people with aces, pocket aces, and they're telling you they're getting in. You can see those large orders flowing in heavily. Do you think institutional traders waited until market opened to get in this trade? Hell no, they didn't. They got in right down here where the volume was at its highest. They got in at the start of the move. And they're just trailing this position up into the highs. Where are they getting out? When the selling really starts to kick up. Right? So knowing that is like the thesis of the leg, the move that's happening, we're just looking to capture scalps within that. Let's say we did get involved in pre-market, which I don't. Okay? 2-to-1 at the low of that swing. Bam. Market opens. 2-to-1 at the swing. Boom. Take profit. Another deeper pullback into the EMA right here and a resumption. This one's a little too risky for me. I would not have taken it. You know you don't take it because look at the sellers. They drove the price all the way down below this. And though buyers stepped in, it's just a little too disrespected to want to take that. My dog's screaming at somebody outside. I'll be right back. All right, I'm back. Apparently somebody's like working on the neighbor's house, so there's like some HVAC guy just getting screamed at by my dog, so I brought her back inside. You asked, what's your go-to instrument to trade on Top Step? Do you mean what ticker do I trade? What's my go-to ticker? What chart? I'm sorry, Cloud. I want to answer your question. I just want to make sure. Are you meaning... Yes, okay, cool. So, I trade these 3 tickers. Close. I don't trade the ES because the NASDAQ is the same. Like, honestly, I can almost guarantee. Let's compare. Let me reset. So this is today's price action on the NASDAQ, okay? Oh, this is crude oil. I'm sorry. Let me go to the NASDAQ. Okay, this is the NASDAQ. And if I go to ES, almost identical. Almost identical. So, does it matter which one you trade? Not necessarily. I like the NASDAQ because it offers high volatility. There's more volume. But they're both completely tradable. I would honestly call them nearly identical. I don't see any reason why you should have to like pick one or the other. Besides, I think that the NASDAQ offers just more liquidity, more movement intraday, more participation. And I'm interested in having that extra participation. Actually, this is a good point. Honestly, you'll notice that all of the charts make a similar move throughout the day. If I go to the NASDAQ and go to gold and crude oil, how similar really are they? Look how similar like crude oil and NASDAQ had today. They both had to drive higher above VWAP. So not necessarily every day and not exactly the same, but oftentimes you'll see the same market movements across all 3. And then you're really just picking which one is offering the cleanest setup. Which one's offering the cleanest setup, the cleanest pullbacks, the most momentum. The one with the ceiling that's giving you enough room for the trade to work out without it hitting. So check this out. This is actually, I didn't trade this today. I didn't trade gold. But if I were to trade gold, what would I be looking at? On the 30-minute, we broke below my trend EMA. Okay? We pulled back into that trend EMA. I'm going to show you on the 2-minute so you can see. Okay? We pulled back into that trend EMA. And it held. What was that level? It was also VWAP. It held VWAP. Okay? Held VWAP. And when do we get interested? Well, this is a momentum trade. We look for momentum to be on our side. So where do we get involved? We're looking at a break of this consolidation. Right in here. You see this? We can take a short with the trend, putting our stop above the swing, entering at the break, targeting a 2-to-1. So let me delete that. Look at this. Doesn't this look like the complete inverse of all those bullish examples I'm giving you? We had a clear direction. It even confirmed it with a retest back underneath VWAP. Even confirmed it with a retest back under the trend EMA on the 30-minute. So we knew short was in play. When do we go short? Well, let's look at the 30-minute. Let's draw a little trend line of when buyers took control. They brought it up. Okay? Let's look at a 2-minute. What does that look like? Let's fix the the chart a little bit. When this trend started to break, and it's that pivoting point of buyers and sellers fighting like a tug of war, guess who's starting to win? Black candles, short. Black candles, black candles. We now know sellers are winning at this point on the screen. Sellers are winning. Like factual. That's happened. We want in, but we need an area to define our risk. We don't just enter because people are selling. We want in on that momentum, so we wait for a pullback. The pullback happens. It's a little sloppy, but you can see it. The baton is passed from sellers to buyers to sellers. Right? To me, that price action is clear as day. And you would want to get long when selling resumes. So it could look something like this. Here's an entry with a stop 2 cents below the highest point of that pullback. So I would go, here's the pullback, just 2 cents, just a smidgen higher. Here or here is fine. You target your 2 to 1. Bam. Snagging a trade. Guess what? Let's say you missed that. You missed that opportunity. Where's another one? What's happening here? Consolidation. This one's even stronger. This one's even stronger. We can go short at the break of a new level. New level meaning below price that hasn't been explored yet. We know that all of these 3 bars are inside bars. This candle tells a different story. We target our 2 to 1. Okay? And we let it ride. This one took longer to play out, but we don't put a time limit on the trade. We just care that our level is holding. As long as our stop is holding here, we can let price do the work for us. It doesn't matter what this looks like. We prefer, obviously, that it stays below this EMA, but watch what happens. We get a cross above the EMA, wicked down, wicked down, wicked down. It gave us another opportunity to enter. If we didn't enter on these first 2 pullbacks, here's a deeper pullback where sellers firmly gained recontrol. Okay? Now, we were already in this trade, hypothetically, so we're not taking it. But look what happened here. We had a deeper pullback of the EMA, and it tried to hold up. You can see buyers just like really trying to regain control of this above the EMA here. You can see they're trying to hold up, but it doesn't. It quickly reclaims, the sellers reclaim the EMA, and our take profits hit. We don't need to predict what's going to happen. We don't need to manage our stop or our take profit. We just set it and forget it. So if you struggle to watch this happen, where you're like, oh, this is like going against me, I'm in the negative here, I was almost to take profit, blah, blah, blah. You need to learn to manage your trades mechanically. We have a 2 to 1 take profit. We're risking 1 R to make 2 Rs, and that gives us edge. We don't have to be right every time. And we don't need to predict what's going to happen. We just let the price action play out. If it hits our stop, so be it. So be it. Okay, so Cloud, you asked a question. You said, can you give some advice on position sizing for prop firms? Example, a 50K account and 150 account. Where are we trading the drawdown, not the full account size? What's the max size we should go for? Okay. That's a good question. Let me go ahead and clean up my chart. I'm going to draw on the screen. So give me a second. I'm going to set this up. Okay. I'm going to go to the daily and just get like a blank screen. Okay. Okay. So 50K account. They give you a maximum loss limit of $2,000. Realistically, what amount per day could we risk of that $2,000? In my opinion, ideally, you're risking no more than $150 to $200 per day. Okay? And this gives us something like 10 trading days before we hit our full stop. Okay? You're giving yourself a decent amount of time to actually experience some drawdown, experience some gains, and stay in the game. I find that $200, you can do so much on $200. You could easily pull $200, $500, $600 per day off of one count using this strategy and only bringing in $200. Okay? Now, how would I structure that? Let's say, hypothetically, we're rolling with a $200 limit. Okay? We got a 50K account. We got a $200 limit per day. That means that to succeed in our trading session, we need to take that $200 and divvy it up. So I'm gonna refresh the screen here so you can see it. We're gonna take $200, and you can't put all 200 into the first trade you see, right? Otherwise, if that trade goes south, you just locked yourself out of a fantastic opportunity, very likely case. You locked yourself out of any potential gains you could have if you risked that full 200 on any given trade. So what I would recommend is we break this $200 daily budget, we break it down into $50 to $70. Let's say we do $50 per trade. We're then given 4 trade opportunities that even if the first one goes wrong, we only used a quarter of our daily budget, okay? And at a 2-to-1 risk reward, if we lost $50 1R on the first one, and then say on the second trade we risked 50 and we made $100, well, suddenly we're in the profits. We're up by $50 on the day, right? And then you can start to get a little more cushion as you're trading, and you don't have to be right every time. You just need to be right majority of the time, right? I want to say that on a 2-to-1 odds, with a 2-to-1 risk to reward, you need something like I would say 60% win rate or higher would really be like a comfortable position to be in, right? You can't really, I think you could still be profitable at a 50% win rate with a 2-to-1. However, that's just not quite enough to be like highly profitable. So we need to work on our entries and our exits and holding our position to that full take profit, because if you're not actually getting your 2-to-1 R on your trades, and you're instead getting, like, you're risking 1 and you're only making like 1.5 to 1, well, suddenly that 50 plus win rate that you need is now like 70% win rate that you need. So you mess with your win rate that's required to be successful. Okay? Let's say you need 70% out of 1.5. Well, you're going to have to be right way too often for this to work out. So I recommend taking a $200 daily budget on a 50K account, breaking it into daily portions where you give yourself like 4 to 5 trades per day, so that you don't lose all of it in the first trade. Because I can't tell you how many times where I sit down and this first trade might be a loss, but then the rest of the day is winning. And if I risked a full $200 on that first trade, you're screwed. You're locked out for the day. I highly recommend you always set a daily loss limit. Always. This size can grow. Like I really love $400. $400 per account is like super gravy for me. I can put on some size and I can trade with $400. I can do some damage in the market with $400, let me tell you. The thing is that when you're starting out, you need to start small within the risk parameters of that 50K account. $200 is more realistic. Honestly, if you're new to this strategy, if you're new to trading, you really should be on a simulation account and not trading at all. But if you were, going for the eval pass, you would want to be risking something like $150 to $200 per day and breaking it into little bite-sized pieces. So you don't have to be right every time. A 150K account, 150 gives you like a goal of something like 6,000 in profit you need to make. And I want to say you get only a 3,000 in drawdown, if I remember correctly. Okay. Which really, it just, like a 150 account doesn't make much sense to me because the stop limit, like the maximum stop for a 150 account is so close to a 50K account that you're not really doing yourself a favor by buying the 150. I think that the 50K is better personally, and I think the because this extra $1,000 you're getting on the maximum loss limit is only an extra $1,000. You take 1,000, you divide it into a month, and what are you getting? Like an extra $50 a day, maybe. So suddenly your $200 daily stop goes to like what, $250 on this account, but you're expected to make what, double the amount total? That math doesn't add up to me. So I'm not about doing the 150K account unless you're in a system that's proved like absolutely working and you've got no trouble passing and holding a 50K account. There's no way that you should be looking at a higher one, in my opinion. Yeah, so $200 a day. I've never used Tradeify, so that's a good comment, honestly. It's 5,000 drawdown on Tradeify, but you have to make 9,000 to pass. Those are some big numbers. What, I don't know, I've never used Tradeify. I've only done live account and Top Step. I also come from trading stocks and options, so that's actually a good point I just brought up. You can actually trade the same exact strategy I'm teaching. It's fractal. You can trade it on any time frame with different EMAs. You can trade it on any chart given the right opportunity. So you can go trade stocks. You can trade it with options. You can trade it Forex and cryptocurrency. It's universal. It's so awesome. I trade a mix. I have my own capital. I'm leaning more towards the prop firm space right now because I know that I'm still a developing trader. Though I'm 2 years in full time, I'm still a developing trader. And it's taken so long to get to this point where even though as much as I would feel like comfortable putting my own money into the market, I would rather continue to stash money away in my personal accounts so that when I'm ready to just hit the gas and really go, that it's there for me. But I know that to me, the risk is much lower trading with somebody else's money and taking less of a payout. So unfortunately, I'm not as far along in my career as I really could be or should be. I think part of that is because it's taken me so long just to get to this point. I've learned to trade by watching S&B Capital videos. I've learned to trade by time in the charts. And I'm 2 years in now, and I'm hitting this pivotal moment where things are clicking on a huge level. Things are really going my way. And I'm looking to scale this process that I've already got going and maximize it. I do think that there's kinks that maybe need to be worked out. And I also believe that I'm developing as a trader where I don't necessarily need to catch these small scalps. I'm learning this position. It's called like core. I'm learning to enter a core position in the earlier sessions of the day and hold and trail my positions and cut some out as the day progresses. So imagine me and my progress as a trader is, yes, I've got an awesome strategy that I could trade and teach other people, but I'm also making this huge pivotal moment. It's like very eye-opening, where I'm learning to trade these legs on the 30-minute and capture low risk entries and trail and close out positions throughout the session. Okay? So I'm really working up to this whole different style of trading that's actually a little bit new to me, because it's a natural progress of traders to make. It's natural for traders to improve over time and to find more opportunity within the market. So I still see, even though I have confidence, I still see, even though I've got an awesome system to follow, that I am still growing as a trader. And until I'm like super profitable and I've got years and time in my position, especially with the same strategy, that I'm not quite ready to go risk 25,000 of my own dollars. I would rather let that sit in a high yield savings account and continue to learn and practice until that day comes. When I'm 100% ready to go risk my own money, I will be. I will have that available. But for now, I'm just fattening up that account and letting the savings and interest develop. Now in time, you start to spot this. When you say small scalps, do you mean 2-to-1 risk reward scalps? I would say yeah. I don't tend to make scalps any lower. I rarely take a 1-to-1 or a 1-to-5 scalp, and it's maybe only if my entry was like late and I know 2-to-1 would be a stretch for the scalp. But yes, a 2-to-1 would be considered a small scalp in my opinion. I kind of consider myself a little bit in between a swing trader and an intraday trader. Even though I'm entering intraday and buying and selling within the same day, I feel like the natural progress for me is continuing to zoom out and slow down a little bit more. I see these candles and I know what's going on a 2-minute so cleanly these days that I can actually position myself. Imagine on a 30-minute chart, I'm progressing towards entering on these pivots in the market and holding these positions and trailing it out in time. So yes, I would say a 2-to-1 is a small scalp in my opinion. Something really cool that you'll start to identify is just looking at the 2-minute or the smaller time frames with VWAP. You start to really recognize, are we expanding away from VWAP? Or are we coming back down to VWAP? And it's really that cycle that happens over and over. The extension, the retracement. The extension, to me, I call it front side and back side, thinking of it like a wave. Like it's literally like a wave of water being pushed up, and that wave is pushing. It couldn't get any further, and then the momentum's shifting, and we're coming back down. Right? And you see that over and over. Watch this, okay? I'll go anywhere in here. Here's another 2-minute. This was yesterday. We had this wave higher, and guess what? It hit this stall point. Volume kicked in really heavy right at the top. And then we had that back to VWAP type of move. Front side, back side. You can see that even after hours too. Sometimes after hours is a little choppier, but you can see an extension away from VWAP. And then the retracement back down to VWAP. right? You can even see it on a smaller scale. We have extension from and the back to VWAP. VWAP's so important. I don't know how people trade without it. Here's another one. Extension from, back to. So something I'm interested in teaching people in time is to capture that back half of the trade. I'm a continuation trader. Like my best strategies revolve around momentum and price continuing in the direction it was going. But I do have strategies in my playbook that I will be unleashing more in the future on the backside as well. These back to VWAP type trades. Here's another one. Expansion from and back to. And you really start to like feel from when the market's starting to give you that. You know if we're extending or retracing back. You just have that. You start to just feel it. Here's another one. I remember this day. This was late after hours. Extension from VWAP. Look at all these good hitchhikers. I see so many trades in here. You can trade a break of this one, a break of this, you know? And then you've got the back to VWAP trade. I would say that I'm probably coming to the end of my session here. Cloud, did you have any questions? Does any of our other viewers have any questions? Anything to wrap this session up for today? All right. Well, a copy of this video will be recorded and shared on YouTube. So if you missed portions or if you want to go back and rewatch, you can go rewatch this video on YouTube. You'd probably be my first subscriber. I appreciate you, Cloud. I would not forget people too as I grow as a my social media presence. You and Tim, I can tell right away are two people that might be interested in hanging out more as I'm doing this. So if you want to share this with your friends, you know how much I'd appreciate that. It's like the only way you could really give back to all my time and effort right now, because obviously YouTube's not paying me shit to do this at this point. This is too early in the stage. So if you want to help contribute, bring some friends. I know that you guys have a little bit of a community going. I didn't plan to do this, but obviously opportunity is telling me, hey, I need to start sharing all of this stuff that I've learned and accumulated with other people because they're going to find value in it. So, heck yeah. I'm going to try to get on a consistent schedule of sharing. But as of right now, I'll just try to give a heads up and, when I go live. But I honestly can see me doing this live every day. I have all the free time. I have nothing on the schedule besides trading live in the mornings. And I think we can expect to see me sharing live more often, starting daily. So, or happening daily. But Cloud, I appreciate you and your support from Canada. I loved all the questions you asked. Dude, you made this so much easier and interactive. So feel free to step in, ask me questions anytime. I'm also on, I created an account. You'll see my handle is the same everywhere. It's Ron Parker Trades. If you find me on X, on YouTube, it's the same handle, Ron Parker Trades. I've even posted some pictures on there. How much do you aim to make in your trading day before you cut it off? Okay, that's a good question. We'll wrap things up with that. Okay, let's say hypothetically you're bringing $200 to the day. I want to make at least $200 or more. Okay, if I make $200 or more, I'm good with calling it a day. I've made a daily stop. Okay, that's gravy. Now, if I make multiples of that, let's say I brought 200. Let's say I brought 200 to the day. And that's the maximum I was willing to lose. But I made $700. There was one day this week where I snagged, it was like $750 off of a core position. So let's say I make $750. Okay? If I'm only risking $200 per day, and this is multiples of what I brought in, I'm looking to keep it. So I'm walking away with that $750. Okay? If I do stick around, I have to determine how much of this $750 I'm willing to give back before I walk away. To me, that's something like I'd be willing to risk $250 of this, because if I walked away with plus 500 on the day, I'm very happy with that as well. So if an A version of my trade comes up and I'm $750 in, I might be willing to risk a portion of the profits. Okay? A portion of the proceeds I've made. But realistically, I would say I am for, if I hypothetically brought in $200, I would say a good day would be $300. A great day would be $600. And a fantastic day might be 1,000 plus. Right? And I'm more likely to walk away depending on the type of day. No, because you don't want to cap your earnings. You know, so to a point, okay? If I made $300 and it's giving me the best setup I've seen all week, I'm actually doing a disservice to myself by walking away too early. Yeah, the worst I can make is the most I could ever lose would be 200. Honestly, you could be so successful bringing $200 a day. Like you could trade the rest of your life on $200 a day. I honestly encourage that $200 number because it's such a good number to bring in. You can take 4 trades at $50 or 3 trades at like $75 to $80, right? And I'm looking to make $300. It roughly, at least what I brought in. If I make $200, I'm good to walk away. If no trades came up and it's a choppy day, I'll just walk away break even. I didn't take any trades. But if I made $300, I'm good to close out. If I made $300 and the rest of the day is still showing me that it's got so much more fuel in the tank, I'm going to stick around, turn that 300 to 6, turn that 600 to 1,000. If the opportunity keeps showing up as an A grade, I'm going to stick around until that opportunity dies off. Right? But you have to start to teach yourself what type of day it is, you know, and you start to get a good feel for it. Is today a no trade day where the market's choppy and doesn't have a clear direction? Or is this a day that I really need to put the foot on the gas and I need to maximize my opportunity so I can walk away with a week or a day that pays for my whole month? Psychology of a monk to have that control. That's hilarious. I would say that mastering psychology is probably the number one thing that like I can't necessarily teach people. You have to just be unfazed by winning and losing. And I think it starts with having your $200 stop. If you just get super comfortable with walking with $200, if you lost $200 and you were so comfortable bringing it in, so be it. If I lost $200 3 days in a row, so be it. Because you know what? Who's to say day number 4, I don't put in plus $600 and that one day just paid for 3 bad trading days. I only need one good day to pay for 3 trading days. But I can't be limiting my profits. Okay? You don't have to be right every day. I can tell you some weeks for me, out of 5 days, okay, you could be wrong 3 of the 5. Say, hit the stop loss, hit the stop loss, hit the daily stop loss. But then, boom, 4 and 5, you made 600 on this one. Maybe I made 300 on the next one. Okay? So we lost 600 on these 3 days. We made 600 day 4, so now we're break even. And then boom, day number 5, we walked away with $300. This week I made $300 per account. That puts my account in the green, and it felt like a losing week. I was battling the markets. I lost more than I won, but guess what? You still walk away with a profit. So if you stick to your stop loss, you walk away with the same limits every day. And if you're ever increasing that $200 risk, it needs to be because you're winning, not because you're losing. I would increase that $200 to $250 if for a week straight I'm slaying it. I'm hitting take profit daily. I'm stretching my goals and I'm hitting my stretch goals. You've awarded yourself a higher budget. Okay? So go bigger when you're trading well. And if you're losing, if you lost 3 or 4 days in a row at $200, you might consider lowering that. Give yourself $150 that next day. Give yourself $100. Show yourself that you can pull it off. You can trade smaller, like one contract or whatever you have to do, and you're nailing the right opportunities. Okay? Yes, my win rate. I tend to average between 60 and 70% win rate. I've reached 75%. I held 75% for a month straight when gold was like really popping off. But I averaged between 60 and 70% win rate. And that's a larger sample size. It's good, but that means though that I don't win every trade. So that's why it's important you don't risk your entire daily budget and one trade, because if you're only winning, let's say 60% of the time, okay? If you're winning 60% of the time and you put all $200 daily budget on your first trade and it fails, well, guess what? You have a 40% chance that $200 is gone on your first trade, right? 40%, which is pretty high. I don't personally like to do that. I like to give myself more chances, so I'll divvy it up. Give myself 3 to 4 trades on that daily budget. 3 to 4 trades. If I'm not winning in 3 to 4 trades, I should be sitting out. I should be done for the day. Right? It makes sense. I'm going to wrap things up here. I had a lot of fun. Cloud, you're awesome. Thanks for hanging out. Appreciate you asking all these questions. I will be back. I appreciate you. I'm glad that it's well received. That's why I'm here and starting to go live is I'm realizing there's people out there that are actually interested in what I'm doing. And it might be a little selfish of me to just sit there and keep it to myself. So it's time to open things up a little bit and help some other people. So I appreciate you, Cloud. You guys have a nice day. Anybody that have watched this, consider subscribing or giving me some sort of shout out. Come participate in the next live session. I'd love to see it. So bring your questions. Go do your homework. Figure out what you need. Come back and feel free to ask. So, all right, guys. I'll peace out. I will catch you later.